Hello everyone. In this video, I'm going to give you a detailed walkthrough of our backtesting system, its settings, and other specifics. At first glance, the settings might seem complex, but by the end of this video, you'll see that they're not as complicated as they appear. You'll gain a clearer understanding of the details. You'll also learn how our dashboard panel works and what its indicators mean. I would like to remind you that our backtesting system is specifically designed to work with our Signals Master indicator. There is a video about it on our channel, and if you haven't seen it yet, I highly recommend watching the Signals Master video first. After that, come back to this video. It will make it much easier to understand what we will be discussing here. Let's start by discussing what a backtesting system is and what it is designed for. The primary purpose of a backtesting system is to provide a tool that allows traders to test their trading strategies using historical data. This means that you can check how your strategy would have performed in the past before applying it in real trading. Thus, you can evaluate the effectiveness and potential profitability of your strategy and fine-tune the settings of your indicators to achieve the best results. The system automatically executes trades on the available historical data and calculates the resulting profit and loss. It also automatically computes various metrics such as profit, win rate, number of trades, profit factor, maximum drawdown, and other data. This provides a deep understanding of the strategy's outcomes, allowing traders to comprehensively assess the effectiveness of their trading approach. After understanding how backtesting systems work, let's delve into what exactly our system does and why it is closely integrated with our Signals Master indicator. First, let's open our Signals Master signal indicator. We see that this indicator has settings for sensitivity, speed reaction, liquidity, and volatility filter, which regulate the signals and determine how sensitively they are displayed on the chart. But what are the best settings for this particular chart? How can we know? We could spend hours manually adjusting the settings, just looking at the chart and roughly gauging how well the signals appear. But this could take a tremendous amount of time, and it's still unclear how profitable these settings are historically. That's why we created the backtesting system. Our backtesting system automatically identifies the optimal settings for the Signals Master indicator, such as sensitivity, speed reaction, liquidity, and volatility filter. Additionally, it automatically displays key performance metrics such as profit, win rate, profit factor, and maximum drawdown for each setting individually. This provides a deeper understanding of the impact and effectiveness of each specific setting. Also remember that accurate historical calculations can only be obtained using Japanese candlesticks. Candlestick types like Heikin Ashi do not provide reliable statistics and can give a misleading representation of profit, win rate, and other metrics due to the specifics of the TradingView platform. Therefore, we recommend using only standard Japanese candlesticks for finding the best settings and testing your strategies. After understanding how the backtesting system works and its purpose, let's move on to the settings. The settings are divided into logical blocks that help you navigate more easily. Although the settings might seem complex at first glance, by the end of this video, you'll realize that they are simpler than you initially thought. The first block we'll discuss is the strategy settings. Since our backtesting system performs trades based on historical data, it initially requires a starting capital. This is the point from which the system will begin trading. Starting balance. Here, you can enter your initial balance for testing the strategy. Trade size. This determines the amount of money the system will use to enter each trade it tests. This can either be a percentage of your initial deposit or a fixed amount from your initial deposit. Fee percent. This is for the assumed commission on each trade. Each trading platform you use may have its own set of fees for each trade, and you can enter your specific commission rate in this field to ensure the results of your test are as realistic as possible. I'd like to highlight an important feature. There are two panels where you can review the results of your trading. The first panel is located on the right side of the chart, where you can see the outcomes of historical trading, including profit, win rate, and other metrics. Additionally, at the bottom, you can open a detailed panel that offers more extensive data, such as your trading results with deeper analytics, including profit breakdowns for short and long directions. It provides detailed information on each trade, including your input settings and more. Both panels are informative and useful, but they have their differences, which I will explain in more detail later in this video. The second block I'll discuss is the optimization settings. Let's start with the sensitivity setting. As you may recall, our Signals Master indicator has a sensitivity setting. As I mentioned earlier, if you were working without the backtesting system to find the best settings, you had to manually adjust the settings and observe how the signals appeared on the chart, without understanding what profit and performance metrics these signals had historically. The sensitivity setting in backtesting solves this problem. Simply input a desired range, for example from 1 to 10, and it provides the best settings for sensitivity, speed reaction, and filters for those sensitivity levels. The backtesting system automatically iterates through all possible setting options within this range and displays the best ones, showing data such as profit, maximum drawdown, profit factor, and other metrics. This automated process significantly streamlines the optimization of your trading strategy, ensuring you achieve the most effective configuration without the tedious manual trial and error. Next, we can try inputting a range from 10 to 29 and also observe the best settings within this sensitivity range, complete with all the data you need for analysis. This approach allows you to further refine the settings based on a broader range of values, ensuring that you can optimize your strategy to match varying market conditions and personal trading preferences. Next, let's try setting the range from 30 to 49. As you can see, this range also includes profitable combinations of settings that have historically yielded profit. I also want to note that TradingView has certain limitations for backtesting strategies on historical data. Given that our backtesting system is highly advanced, we must adhere to these limitations, such as the sensitivity range being limited to 20 numbers, as I previously demonstrated with ranges like 1 to 20 or 20 to 39. By adhering to the limitation of a 20-number range, the strategy testing occurs across the entire available history of the chart. This ensures comprehensive and accurate backtesting results within the constraints of the TradingView platform. If we enter a range such as from 30 to 50, our script will continue to function, but will be limited to the last 5,000 bars. A warning about this limitation will appear at the bottom of the dashboard with the results. As you may have noticed, the number of trades has decreased because the backtesting is conducted on the last 5,000 bars, not the entire historical data set. Therefore, it is best to test sensitivity within a range of 20 numbers to ensure that backtesting covers the entire available historical data without such restrictions. Let's adjust the sensitivity settings back to reasonable limits and continue. The bars limit setting controls the historical data range to be used in backtesting, capping it at a specific number of bars. For example, if you check this setting and enter 1,000 in the field, the backtesting system will begin its analysis starting from the last 1,000 bars instead of the entire available history. As you can see, the number of trades has also decreased because we are now testing the strategy not on the full historical data set, but only on the last 1,000 bars. This allows for more focused testing over a shorter, more recent period, which can be useful for strategies sensitive to current market conditions. Next, we have the date settings, where you can select the period over which you wish to conduct your testing. You can choose either a single date or a range from one date to another for the duration of the test. For example, you might need to test your strategy from the beginning of this year. You can set this specific start date and evaluate the performance of your strategy from the start of the year to the present. This allows for a deeper understanding of how the strategy performs over a specific time period, providing insights into its effectiveness during different market phases. The next block is Signal Settings. I'll explain in detail what this block is for and what it controls. The first setting is Signal Mode, and we have two modes for this setting. Buy. If you choose the buy mode, the backtesting system will look for the best settings considering your desire to only purchase the asset. It will search for the best entry points specifically for buying. As you can see on the dashboard, the optimal settings have changed, as well as the performance metrics, reflecting that we were purchasing the asset. Sell. The next mode is sell only. In this mode, the script will search for the best settings considering that you want to only sell the asset. It will find the best settings for this task. On the dashboard, you can see that in this case, the sell-only strategy shows worse results historically compared to the buy-only strategy. This setting is suitable for people who are looking exclusively to buy or sell an asset. This way you can find the most optimal settings for your strategy. The next settings are duplicates of those found in Signals Master, and I'll now explain in detail why they are here. As you can see on the right, we have two dashboards. The lower dashboard is designed to find the most optimal settings from the range of sensitivity values specified in the optimization settings block. The upper dashboard, on the other hand, is intended for testing manual settings that you can enter yourself. This allows you to see the effectiveness of the settings you've inputted here, providing immediate feedback on how these adjustments perform under historical testing conditions. This setup ensures that both automated and manual testing options are available, giving you comprehensive tools to fine-tune your trading strategy. Let's enter some random parameters to demonstrate how this works. As you can see on the upper dashboard, the results have changed, and it displays the settings you've entered. Additionally, the signals and entry points you see on the chart have also changed because the entry points on the chart are shown based only on the settings from this block. This direct feedback allows you to immediately see the impact of your adjustments, helping you better understand how changes to these parameters influence the trading signals and potential entry points generated by the system. This feature is essential for fine-tuning your strategy in a more interactive and responsive manner. I also want to point out that the strategy tester, located at the bottom of the site, also considers only the settings from this block in its calculations. It's important to understand this for proper use of the backtester when testing your strategies. Therefore, if you want to see the results of specific settings for sensitivity, speed reaction, and filters, you need to enter these settings here. Only then will you be able to see all the data in detail, providing a clear view of how these particular settings impact the performance of your trading strategy during the backtest. Next, let's discuss the Show Entry Signal setting. Let's enable it and see how it works. First, let's disable the trade entry markers on the chart in the Style settings. As you can see, this setting displays signals on the chart as they occur, with the indicator coloring the bars in contrasting colors to highlight entry points. You also have the option to choose any color for the bars that you prefer, allowing for further customization to suit your visual preferences. This feature helps to clearly identify when and where signals are generated, enhancing your ability to make timely trading decisions. The fourth block is dedicated to take profit and stop loss settings. To help you better understand how setting take profits and stop losses works, let me explain how testing functions before these settings are enabled. This will provide a clear picture of the impact these critical parameters can have on the performance of your trading strategy during backtesting. Without take profits and stop losses, the backtesting system enters a trade after the signal is confirmed, that is, after the candle closes, and it exits the trade when an opposite signal appears. This process continues similarly for each trade. This is how the backtesting system operates without take profits and stop losses, relying solely on the entry and exit signals generated by the trading strategy to manage trades. This method allows you to see the natural duration and outcome of trades without predefined exit points. Now that you understand how the backtesting system calculates without take profits, let's delve into the block where you set up take profits and stop losses. You have the option to set up to 4 take profits to calculate your strategy's performance. You can check the boxes next to the take profits you want to set. In the left field, you can enter the percentage at which the take profit will trigger. For example, If TP1 is set at 1.5%, this means that if the price moves in our favor by 1.5%, we will secure a part of the position for that trade. The right field allows you to specify the percentage of the trade amount you want to fix. For instance, if you enter 25% in this field, it means that upon reaching the first take profit of 1.5%, you will secure 25% of your trade, leaving 75% still in the trade, hoping the price will continue to move in your favor. This is known as scaling out of a position, a technique often used by traders to lock in profits incrementally while maximizing potential returns. You can also choose to set just one take profit and adjust it to close 100% of the trade at that point, thereby simply closing the trade upon reaching the first take profit. Having explained the workings and purpose of the fields in this block, let's now demonstrate how this looks with an example. We'll select 4 take profits, fixing 25% of the trade at each. As you can see on the dashboard, additional data have appeared, such as our take profits. Each column shows the number of trades that reached each take profit level. For instance, in the first row, there were 721 trades initiated, 575 of which reached TP1 and 330 reached TP4. This visual representation on the dashboard allows you to clearly see the distribution of your trade closures at different profit points, helping you analyze the effectiveness of your take profit strategy. The next setting is moving the stop loss to break even after reaching a certain take profit. Let me explain in more detail. This setting works as follows. If you have set take profits and you check the box SL to break even after reaching for, say, TP1, then when the price reaches your TP1, your stop loss will be moved to your entry point, effectively making the trade risk-free by removing the potential for loss. Moving the stop loss to break even is an excellent feature for risk management, reducing your risks in trading and maximizing your profits over time. This technique ensures that once a certain profit level is reached, the trade can no longer turn into a loss, which can be particularly reassuring during volatile market conditions. Let me demonstrate visually how this feature can improve your trading results. We'll enable this function and set it to trigger at the first take profit. As you can see, our win rate has significantly increased, and the overall performance metrics of our trading have improved. This makes the setting extremely beneficial, and we recommend using it to achieve optimal results. You also have the option to select which specific take profit level should trigger moving your stop loss to the break-even point. This flexibility allows you to tailor your risk management strategy according to your confidence in the market's movement and your trading style. The next setting in this block is the establishment of a stop loss at a specific level that you choose. You simply check the box to set the stop loss and enter the percentage by which the price must move against you to trigger the loss. By default, it is set at 4.5%. And if the price moves against us by 4.5%, our position will be closed 100% if no take profits are set. However, if take profits have been set and any of them have been reached, the stop loss will close the remainder of the trade upon being triggered. As you can see on the dashboard, the metrics have also changed. This setting allows you to manage risk effectively by limiting potential losses, which is essential for maintaining a healthy trading strategy. I would also like to highlight an important detail. Whenever you make changes to the take profits or stop losses, or any adjustments to these parameters, the backtester performs a search for the most optimal settings for sensitivity and other parameters, adapting to your adjustments. Thus, by adding a take profit or changing the percentage at which it triggers, our backtester searches for the best settings for signals considering these changes. It's crucial to understand this aspect when working with our backtesting system, as it dynamically adapts to optimize the trade outcomes based on the settings you define. The final block in our backtesting system pertains to the dashboard settings. The first feature here allows us to hide the optimization panel if necessary. This can be particularly useful if you want to simplify your view or focus on other aspects of the backtesting results without the distraction of constant optimization data. It's an excellent tool for streamlining the interface according to your specific needs during analysis. The second feature allows you to hide the panel displaying metrics from signal settings. This flexibility lets you customize your view by only showing the panels that are relevant to you. It's a valuable tool for focusing on specific data and avoiding clutter on the dashboard, making your analysis more efficient and tailored to your immediate needs. Next, you have the option to select the number of results displayed in the optimization panel. This feature is especially useful for clients with narrower screens, where numerous results do not fit well within the chart area. You can reduce the display to show only 10 or even 3 results, according to your convenience. This customization helps in managing the dashboard space effectively, ensuring that the information remains clear and accessible without overwhelming the visual space. The next setting allows you to choose the sorting order in the optimization table. By default, it is set to sort by profit, but you have the option to select from 4 sorting criteria: profit, profit factor, win rate, and max drawdown. Let's select profit factor. As you can see, the optimization table is now sorted according to the best profit factor values. This feature enhances your ability to quickly identify the most efficient settings based on the specific criteria that are most relevant to your trading strategy, allowing for more informed and effective decision-making. Now let's select win rate as the sorting criterion. As you can see, the settings with the highest win rate are now at the top of the table. However, as you may observe, a high win rate does not necessarily guarantee overall profitability and should not always be the primary indicator for choosing settings. This highlights the importance of balancing different metrics to determine the most effective trading strategy, emphasizing that while win rate is crucial for consistency, other factors like profit and max drawdown also play significant roles in a well-rounded strategy assessment. The final setting we will discuss is max drawdown. Max drawdown measures the maximum cumulative loss experienced during trading over the historical data. The optimal settings in this case are those with the smallest values, as lower drawdowns are preferable for risk management. It's important to note that this is a cumulative metric, not per single trade. It represents a series of unsuccessful trades that, when combined, resulted in a drawdown of, for example, 3.18% of our deposit, if we consider the top entry in the table. This metric is crucial for understanding the risk involved in a trading strategy, as it helps traders gauge the potential losses they might face and manage their capital accordingly. Next, we have settings for the placement and size of our optimization tables. With such a range of flexible options, I hope you can select the best layout and view for the tables that suit your needs. This customization allows you to organize your workspace efficiently, ensuring that you have clear and easy access to all necessary data without overcrowding your screen, thereby optimizing your analytical process. I would like to remind you that our backtesting system is an extremely powerful tool for finding the best settings for our Signals Master indicator. Combined with it, you can discover the most suitable settings specifically tailored to your trading style. This capability enhances your ability to fine-tune your strategies to maximize effectiveness and adapt to various market conditions, ultimately helping you achieve better trading outcomes. Thank you for watching this tutorial, and I wish you profitable trading.